It's not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff, so you get the videos I put them out, so you don't think I see them analyzing that data. But like I tell every day, the day they release us is false. Man, it gives a false narrative of the markets, making bad trading decisions. Listen, the world's confidence in our banking system is waning. Okay, it is waning, and even though our government wants us to think that the banking industry is stable, that everything is A-OK, around the world, people are not in agreement with our government. Okay, European hedge funds have reduced their exposure to American banks. They have lost confidence. I'm not saying full confidence, and I'm not telling you to buy, hold, or sell a European stock. I'm not telling you to buy, hold, or sell any bank stocks. That's not what I'm telling you. What I'm telling you is based on everything I'm seeing, everything I'm reading. They have lost confidence in our banks to make the money. Okay? The shares in European banks are outperforming U.S. banks. I mean, that is kind of unprecedented, okay? And remember when everybody took their money out the U.S. banks because they had no confidence, they were scared and were running for the hills? That didn't happen in Europe. There was no flight of depositors from banks in Europe. But the most telling thing to me is this. The stock that the European bank, like their 600 bank, like Dow Jones Stock Exchange, it's up. It's SXTP. It's up 8%. The Dow Jones U.S. Banks Index, the DJ USBK, is down 9%. And you guys might be saying, but Donahue, what difference does that make that European banks are outperforming American banks? I tell you what it means to me, and this is just my opinion. It means that the banks are losing value. It means the bank's liquidity is drying up. It means to me that they won't be giving out those high-risk, over-leveraged loans to the shorters to keep them shorting AMC, GME, BBBY, MULN, and the other mem stocks. So as these banks' liquidity dry up, as their value drops, the money they have available to be lending to these hedgies is going to drop. And when that happens, when it hits the tipping point, they'll be forced to cover their short positions, regardless of lawsuits, regardless of anything else going on in the market. Anyway, please leave some comments. Tell me what you think. Do you think that European banks outperforming U.S. banks is bad for our economy, but great for people who are long on mem stocks? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.